London Property, home of Super Prime, where you can find informative, educational and entertaining content covering all aspects of property.
Hello and welcome to the London Property Podcast. I'm your host Farnaz, and today we're very excited to have a roundtable debate with Andrew Weir of LCP and Tom Bill of Knight Frank and Marcus Dixon of LonRes. Welcome.
Hi, Farnaz.
Hi, Farnaz.
Hello, hi, Farnaz.
So you all see the market from different aspects, so this will be very interesting for our listeners. Why don't we start, Andrew, with you on how do you see the property market changing in London?
Well, the property market, obviously, the prime central London market, obviously, has been through a period of considerable change over the last 18 months, and a lot has changed already. I think that what we're about to see, which is more interesting than what's happened in the past, is that we will probably early next year, I think we will see a real notable recovery in the sales market as travel restrictions lift and we have a sort of normalisation of the market. And one of the reasons I think that or believe that is that you don't have to look much further than what's happened in the lettings market in the last 3 to 6 months, where we've almost effectively had sort of 2 years worth of tenants rock up back in London, all in a very short space of time. All the stock has gone. There's very little stock available, and prices now that we're achieving are sort of back at pre-pandemic levels. And I think that is a sort of an early indicator or very much a precursor for what will happen in the sales market in 2022 and beyond.
Thank you very much. And Tom, what would you like to add to that?
Yeah, I agree with Andrew. I think the prime central London property market is used to getting all the headlines, and it hasn't really got the headlines over the course of the pandemic. That's been all about the country market, people looking for more space and more greenery. At the moment, it feels like it's on a path back to normality. It's not there yet. So we have overseas travel restrictions have been relaxed. We're seeing more overseas buyers, but it's certainly not business as usual compared to what it was 2-3 years ago. Not all these overseas buyers are necessarily in buy mode at the moment, but it's taking these small steps back towards normality that I think will probably kick in more fully next spring. So, for example, at the moment we're seeing there's still greater demand for more outdoor space in prime central London. There's still less demand for basement flats or flats with outdoor space. That's where we are. We're not back to where we were. As I say, 2 or 3 years ago. And next year, I agree with Andrew, I think things will start to really kick in. It feels like a market that's long overdue a period of recovery. This is going back 5 or 6 years where it's been fairly subdued. And we're forecasting, for example, 7% growth over the course of 2022.
Fantastic. And you can tell us some facts, Marcus, from your data-driven information.
Yes, hopefully. I'd agree with what's been said so far. One of the really interesting changes that we've seen across the central London market has been how local the market has been. So we've seen certain areas that have performed really well. So particularly the family house market in sort of edge of zone 1 into zone 2. So we've seen St John's Wood, Notting Hill, Maida Vale to a certain extent, Hampstead, all performing very well. Whereas some of the sort of more core flat markets like Knightsbridge and Belgravia, going into South Kensington to a certain extent, Mayfair, haven't performed quite so well. So, for example, if we look at a market like St John's Wood, prices there now are on average slightly higher than they were in 2014. Whereas if we look in Knightsbridge and Belgravia, we could be looking at around 20 to 25% down on where we were at the previous peak. So obviously there's an opportunity there. It's certain people who are buying into those markets that are still 20 to 25% down from peak could see, it's a real opportunity for them. And we expect that as we see international buyers coming back, that those kind of areas which traditionally have appealed to a high proportion of overseas buyers will perform better. So I think it's all about when those overseas buyers can come back, when those travel corridors are fully opened up. And when that happens, I'm pretty confident about central London.
So actually going back to what you're saying is the international market are the ones that are really focused in these areas, Knightsbridge, Belgravia, Mayfair. So it would go to show that that's had an effect on the prices because of that. And then the locals who want to improve their family life have gone to these houses with gardens and so on.
Yeah, I mean, I think that what we've seen is that since the start of the first lockdown, the central London market has been much more of a domestic, and by domestic I mean people based in the UK. So they might be, they might have originally been born overseas, but people who are based here. And what those people tend to buy is more closely aligned with the Notting Hill townhouse than possibly the Belgravia lateral. And so we've seen a situation where there's been fewer overseas buyers, and markets which appeal to those buyers haven't performed as well, which is, and that's been a challenge. But if that changes going forward, there's some real opportunity within prime central London.
And it is always a cliche to say, but that window of opportunity will inevitably close quite quickly. And I think if you look back at history, if you look at the immediate aftermath of the credit crunch, 2009, 2010, if you look at post 9/11, even going back further, when the market has a difficult moment, prime central London, when it does recover, recovers incredibly quickly, so quick it can sort of almost hit you in the face. And that we've just witnessed that with the lettings market. And I think that it's very much from sort of the buyer's perspective, people should take advantage of things while they can. I would say that the one note of caution is that stock is the challenge now, because obviously the nature of the ownership of property within prime central London is when the market softens, they're not in a rush to sell. They're not very keen on discounting their price. They're very happy to sit it out and wait. So if you can find stock, now is a great time to buy. Hopefully, I think there's lots of predictions that the spring of 2022, there will be more stock. There's a lot more valuations are happening with people intending to list their property in the early part of next year. And I think that thereafter, that wave will come through quite quickly.
I think the other thing, just for overseas buyers in particular, to think about is what the pound does next as well. I mean, it's only going to get stronger, I would say, over time. We're hearing about the Bank of England, possibly raising rates. He didn't do that last month or this month. As soon as it starts to do that, the pound's going to get stronger. Arguably, the Brexit trade deal is not yet priced into to the pound. And so I think over time, as the economy starts to pick up, as the bank starts to raise rates, that discount, that amazing discount that overseas buyers have had over the last, since Brexit really, is just going to get narrower and narrower as well. So that's probably something to sort of just have in the back of the mind as well.
And what do you guys think about the investment side of the market? So people who are actually looking to invest into the lettings market, and any hotspots to consider?
I mean, it's a good time to be a landlord at the moment, but the lettings market has swung from a tenants market to a landlord's market literally within the space of a few weeks over the summer. And so rental values are now rising as fast as they were falling at the start of the year. We had this complete inversion in terms of stock and demand. Where we're seeing rental value growth strongest now is quite clearly around the sort of the business districts around London, so around Islington, even the South Bank, Tower Bridge, prime central London, probably to a slightly lesser extent. But those areas, I mean, there's literally there's historically low levels of apartments, of stock in those areas. But there are, to be fair, historically low levels of houses in markets like Notting Hill and Kensington as well on the rental market. We're actually seeing now people that are in those types of properties looking to renew summer 2022 are doing it now because they're looking around, they're seeing no stock, and they're thinking, right, we need to act now because of that, because of the nature of the market. It's a landlord's market. The only other thing to say, one thing we're starting to notice is stocks starting to come back onto the rental market, which will put downwards pressure on rental values. This is people who have tried to sell, haven't got their asking price, and are putting it back onto the rental market. We're just starting to see signs of that happening, so that supply squeeze in the rental market should start to get a little bit less acute in the coming months.
We've seen that taxation's actually taken a lot of individual landlords out of the market. Yes. And do you think that prime central London is going to see institutional investment, because they tend to like to buy in bulk? But is there some kind of way that you see that they're going to come into prime central London to provide stock where the tenant's kind of protected, whether the landlord sells or not, they can carry on renting, is really what I'm getting at.
One of the things we saw a lot during the early stages of the pandemic, the sort of the lockdown periods, if you like, was we did see a lot of people a lot of our clients wanting to invest really at scale, benefiting from the sterling exchange rate and their hope for softer prices, and wanting to invest at scale, get the stamp duty saving on multiple units. and that so people looking for blocks of apartments was something that we had a really big increase of demand on. So I think I think people wanting to invest in London, I think it is a knock-on effect of people liking London, and it's just an extension of the fact that they see this as a safe place to invest. They've got the benefits of GMT time zone, benefits of the rule of law. They like having their kids educated here. They've probably worked here or educated here themselves. They've got family here. So I think it's just an extension of the overall general appeal of London.
Yeah. And your data is agreeing with us, Marcus?
Yeah, I mean, I think that certainly what we've seen within the rental market, this sort of rapid turnaround in terms of going from a pretty oversupplied market at this point last year to an undersupplied market now, it adds some confidence for those investors who are looking at London that this market is coming back, and it's coming back, pretty rapidly. And I guess as well that echoing what Tom was saying is that the demand seems to be for small flats close to people's places of work. And actually, if you're looking to invest in blocks with multiple units, the likelihood is that they will be studio 1 and 2 bedroom flats. And actually, at the moment, that seems to be what people want. And if we're looking at this sort of more hybrid way of working, so doing a few days from home and a few days in the office, it might be that traditionally your family house was in Fulham and you had a little cottage in the Cotswolds. We could well see that that's flipped. So people have a much larger home in the country and a smaller place in town. And it makes sense that that place is close to where you live. So I think that potentially the way things are changing suits the sorts of properties that those investors like to buy. So I think it's a real positive, and it could open up that market, which, overseas, it's, the sort of institutional investor build to rent market is a lot bigger than it is in London. But I think it's a market that potentially, with what's happening at the moment, could grow quite significantly.
So one of the trends we've seen in our rental portfolio is ordinarily pre-pandemic, we had about 52% of our tenants were under the age of 30. That's now much closer to 62% of our overall portfolio, tenants under the age of 30. So we've seen a real sort of uptake. The quickest people back here taking advantage of softer rents have been young people. And I suppose that they've spent long enough living at home with their mum and dad in Surrey on Zoom calls, and they have rushed back here as soon as they could to benefit their career and their social life. If you remember, it's not that long ago, I was in my 20s or 30s, I can sort of remember the desire to be in London was considerable. It was the only place I wanted to be for all of the aforementioned reasons. So they've really rushed back, and I think that should be a source of encouragement to investors of whatever flavour, either individual or institutional, that there is this very much from what we're witnessing at the coalface, there's a very strong desire amongst young people to be back here living and working in London. Yeah,
the students have beaten the corporates in terms of that race for stock. Absolutely. The corporates, I think, have been left quite frustrated often about the sort of lack of availability, people kind of relocating to London from overseas, have been having to extend their search periods, have been having to stay in hotels for longer because there just isn't the stock there. And that's largely been taken by students, international and domestic.
And do you think we've lost some of that stock to sort of flexible rentals with the Airbnb platforms becoming more relevant, or? We
did initially. A lot of it it went over to the Airbnb. Well, the Airbnb stock came on to the long let market. Sorry, I should say. Overall, I think a bit of it's getting lost. But I'm not sure people have really, or landlords probably haven't adopted the idea that the short let market is one. It's a good investment for them. But actually, at the moment, there's a real dearth of short let properties. And right now, if you're sitting on a short let property in a good location in London, I mean, you will have no problem filling it.
I think landlords are, on the whole, they view short let tenants as high maintenance, hard work, heavy personal management in that is much higher. Long let, they feel they can effectively just put a tenant in there and sort of forget about it. They've got as long as they have a good property manager, they can it's at arm's length. So I think there is from what I've seen, there is still a reluctance really to get too heavily involved in the short let market, unless someone has effectively the time to run it as a full-time business.
And this exodus from London that everybody was talking about throughout lockdown, so we've touched on it a little bit with what you have all said, that maybe at some stage in your life it makes more sense to leave London. It would have probably made sense to leave London with or without the pandemic, and that exodus is being replaced by the younger people coming back. Do you think, I mean, I always wonder if, after one cold, dark winter in the country, how many of these people are going to think that wasn't such a great idea to begin with? So maybe from the data perspective, because you also covered the country, Marcus, at LonRes, what have you seen that is maybe contrary to what we've been hearing and talking about?
Well, I think that, there was a lot in the press about this mass exodus from London, particularly the first lockdown. The weather was unseasonably warm. Lots of people were going for their hour-long walk in the evening, and it was beautifully sunny, and the idea of doing that in sort of the rolling hills of the home counties was pretty attractive. And so I think definitely people left London who probably wouldn't have left London for another 2, 3, 4 years. I agree with is it so attractive when you're on a branch line platform and the fourth train that's been cancelled in November and you've got to be back in the office? Probably not. So I think we will see some sort of boomerang buyers who will be purchasing back in London. But equally, I think that the markets, it's like Southwest London family house market, has been very strong. So whereas the people who we've all seen in the papers who have been the ones who've gone from London to Cornwall and they're commuting back for a day a week, they're very much in the minority. And actually a lot of people have gone to the sorts of places that they always went. So they've gone to Winchester because it's pretty commutable in. They've gone to St Albans. They've gone to Southwest London. They've gone into Surrey. So, it definitely has happened. But quite a lot of those people have stayed in London. And so it's the Wandsworth house is as attractive as it always was. It hasn't meant that everyone has decamped to the south coast. So I think it's been slightly sort of, over-exaggerated the number of people that actually left. And I think we will see quite a few of those people coming back, whether they come back and buy a family home in London or whether it is a second property in town. I'm not quite sure. But I think a lot of people are trying to work that out at the moment. And it's one of the reasons I think why the rental market has been so strong, because people who need a base in London, they're not necessarily buying quite yet, but they're certainly renting. So, I think it's a bit dangerous to think that, there's been this mass exodus of people, which,
I think initially there was a sort of headlong rush to the Cotswolds and to the southwest of the country. And we track where our London-based buyers are looking. And over time, it's great. It's just retreated back to the southeast, and the southeast, as Marcus alluded to, is now the most kind of in-demand part of the country from where people are moving to from the capital. So it's evolved, I think, over time. As initially everyone wanted to be very rural, and now it's probably people looking to be more urban, sort of the best of both worlds type of scenario that you get in some of these, home counties markets. They're very much in focus. So it's evolved over time, and we're seeing also people coming back into London. And the only other thing to say is it was something that was happening pre-pandemic anyway. Affordability has been really the key driver for, where particular property markets are going in the capital. And we saw people leave London, and we talked a lot about affordability before the pandemic, and we'll talk about it a lot after the pandemic. And it'll still sort of dictate these migratory patterns around the country.
Yeah, I couldn't agree more. I mean, as long as I can remember, people have always got, people I've worked with or known socially, they've always got to a point in either their private personal life or their work life where they've moved out of London. I mean, that is far from a new phenomena. I think it's, as we've talked about, it probably was exaggerated. It was sort of accelerated, if you like, because of the pandemic. And I think there'll be a bit of a sort of reversion back to normal. I mean, the only other thing to comment on is a trend I've personally witnessed on my way to the office in the week. I'm in the office 5 days a week, Monday to Friday, but there is definitely, I think that people are calling it the twits, where on a Tuesday, Wednesday and a Thursday, there seems to be much busier. The commute is much busier. Even when I go out of the office in the middle of the day to buy a sandwich, there seem to be a lot more people on the pavements on a Tuesday, Wednesday and a Thursday. Mondays and Fridays seem to be a day where those who are falling into the new hybrid pattern and are working part home, part, those definitely seem to be the days where they're working from home the most. So that's a new thing that's happened for sure.
Very sensible, I think, to have a 3-day working week.
Yeah. I think that's the polite version of it. The only other thing to probably add is that the prices in the country are still, relatively speaking, better value than they are in London compared to the global financial crisis. They're still not back to where they were. London, of course, accelerated markedly over the last sort of 10 years. The prices in the country was quite subdued, really. It's been quite a subdued few years. And so there is still an element of value to be found in the country and people taking advantage of that.
And I mean, it's a bit early to tell what the overseas interest in London is going to be from the global community. But, we've all experienced they've pulled back since all the tax changes that have affected them. But what do you think the future holds for the overseas interest?
Personally, I'm seeing lots of clients from two places, particularly Middle East, and the other one is India. We've got a lot of people who are already, some of them are already back in London, and those who aren't are definitely have travel plans for later this year and certainly early parts of next year. That's already happened, and some of them are commenting to me that apart from Dubai, which is a place that they seem to like having a foothold, that London really is effectively the only, in their mind, is sort of the only place they want to be other than their home territory. So I don't think that is diminished at all. Arguably stronger than ever from what I'm personally witnessing. We've had a few people turn up from Singapore as that's opened up a little bit now. We've had a few of our clients arrive from there. Obviously, Hong Kong is still closed, but those territories where you can slightly more easily travel in and out, we're seeing a really strong appetite.
Yeah, I'd probably just add North America to that as well. We have seen actually the last sort of weeks and months interest from North America coming in. But there's a long list of evergreen reasons why people come to London, and the pandemic has done nothing to change any of that. So I think it's going to pick back up, and I suspect next year it's going to probably take people by surprise just how strong the market is after this, not just this fairly subdued pandemic, but actually a fairly subdued 5 or 6 years. I think we're going to start to see that reverse quite strongly next year.
Well, we mentioned earlier about the Boris bounce. If you look at the general election, December 2019, so December, January, February, hanging over into March of 2020, we already then saw, as soon as the Brexit thing was determined, whether you liked it or whether you loved it or hated it, the clarity that general election created meant we had lots of our buyers jumping off the fence and committing, and we saw a real rally in the market, both in terms of volume and pricing. And of course, the pandemic sort of called time on it. So to some extent, I think what we're going to witness or are beginning to witness now and again early next year is really just a sort of a continuation of where we left off really in March 2020, because it had already sort of started happening.
Yeah, I mean, it was definitely just the pause button was pushed on that bounce. And what's interesting about the central London market is there are very few forced sellers. So the cost to hold property is pretty low. So actually, a lot of people are willing to wait, and which has meant that actually we haven't really seen any really significant price falls over there's obviously a few properties that are always distressed sales, but across the board actually prices have held pretty steady, and a lot of those sellers are waiting for the market in their particular neighbourhood to come back before they sell, so they're slightly sort of shielded from any significant falls. And a lot of signs are that these buyers will be coming back, so people are happy to wait. And certainly, if they do need some income in the meantime, the rental market's doing very well, so they could they could switch it across to that.
On the subject of overseas interest, and that makes me move on to the new build versus old heritage, which traditionally used to be something that people would buy off plan as rental investments, and as individuals are being taken out of the market as landlords. Are you seeing a shift towards bulk purchasing these? Do you see that developers are still developing these to sell, or is it moving to the build to rent market? What's happening there?
I mean, my take on that is that I think new build it's still popular, but it's popular with a very specific group of people who are very much overseas orientated, as everyone knows, the Far East, Hong Kong, mainland China, they do like new build. They're for various cultural reasons. They don't like what they call second-hand property. It's also the fact that they can buy it at arm's length. They can, the developers come to them in their home countries, and they're very familiar with that. The buying it off plan and not having to complete on it for a year or 2 or 3. They're very comfortable with that, and it suits them. I think that there is another market which we tend to deal with more readily, which are overseas in nature, but these are people who have been educated often in London or Western Europe. They've lived here, they've worked here, and one of the things they like is that when you wake up in the morning in prime central London on a Saturday morning, look out your window, they know exactly where they are. It is very distinctively, architecturally, there is only one city in the world that looks like London, much the way that Paris only looks, nowhere else looks like Paris, nowhere else looks like London. And that for them is an appeal. And from the investment perspective, it's also the nature of the constrained resource. The worry that a lot of our clients have with new build is that they all get, you get 300 of them on the sales market all at the same time. You then get 300 of them all on the rental market all at the same time. And they view that to get into capital appreciation takes at least one cycle of the property market. So from an investment perspective, they like the constrained resource nature of period heritage property. And it's sort of why, for them, it is distinctively, uniquely London. And it's one of the reasons they want to be here. So I think it's horses for courses. I view it, new build developers probably won't like me for saying this, but I sort of think of new builds as being like a BMW. Really popular, great car, but there's an awful lot of them around. PCL, prime heritage property, a bit more like a Ferrari. It's much more distinguished, it's much more distinctive. And if you buy the right one, it goes up in price, not down, as second-hand cars go down in price. Ferraris don't; they appreciate. So they're both good, but they perform differently, and they appeal to different types of buyer.
Yeah, I'd actually say since international flight restrictions were relaxed, actually it's the new build market that we've seen outperform the second-hand market. I think a lot of searches were just put on hold by the pandemic and have now been reactivated. A lot of people, I think, are just attracted by the fact that they can move straight in. It's just it's very sort of straightforward. Any sort of prospect of doing building work at the moment, I think, is putting people off because there's all sorts of disruptions around supply chains at the moment that are getting pretty serious. And so actually we've seen in the last couple of months, new build has been the type of property that's really attracted much more interest. And it's certainly, I think, in prime central London, in those golden postcodes, is certainly where a lot of the action is right at the moment.
I would agree with that oddly to an extent, in that, and I always used to say that the benefit of buying a new build is that the developer, the builder, they wake up in the morning, they catch the tube to go to work with the intention of selling a property. They're there to sell you something. Whereas when you're buying period heritage property, it's, as Marcus was saying earlier, the nature of the ownership is they're not always very keen to sell. They're certainly never in a rush to sell. So it is harder to bag yourself a period heritage beautiful home because the nature of the ownership. Whereas new build, it's a much more straightforward process. In a tricky market, there are ones there that you can buy quickly and easily, comparatively speaking.
Yeah, and I guess something else that was probably worth noting as well is that for new build property, it's not easy to turn the tap on and off very quickly. So what we've seen is over the last 18 months that the number of new build starts has dropped quite significantly, obviously because of various lockdowns and shortages of material, shortages of labour. And actually turning that tap on takes a while for those properties to come back through the system. And so if we're looking at a situation where there is a real increase in demand from institutional investors, from build-to-rent operators, where there's a relative scarcity of new schemes coming through, we could be in a situation where new build, which particularly outside of prime central London. There's been a lot of large schemes with quite high numbers of units coming through. We could be looking at a situation where new build, certainly for a certain period of time, because of disruptions in the pipeline, could be a little bit more scarce than we've seen in the past. So it'll be interesting to see how that plays out.
True, particularly at the very top end of the market. I think there's a shortage is imminent. I would say that of £5-10 million plus new build type properties.
Talking of the top end of the market, what's happening to the super mansions, do you think?
Our data says it's very busy. So we this year's been a very odd year because we've had the stamp duty holiday, which obviously originally was going to be March, then it was extended until June. I mean, there was a little extension to the end of September, but for prime, that didn't really make much of a difference. But what we saw is these two huge peaks in activity, and the activity was mainly sub 2 million, because that was where the biggest, the £15,000 saving was the highest proportion of your bill. So we saw these two peaks in activity. Interestingly, above 2 million, that market has continued to be busy throughout the year. So the sub 2 million market since the end of June has been quite quiet because deals were pushed forward. The top end of the market has continued to be very busy, and we're seeing record months sometimes for 5 million plus sales across central London. And some of that is large flats in central London, but increasingly it's big houses. And so, activity in that market is really busy. So if you look at October, it's pretty quiet below 2 million. I think we're something like 28% down in terms of sales compared with October last year. But at 5 million plus, we were up 10%. And that's been pretty consistent over the course of the year. So part of it is that people are looking for family homes, long-term purchase, outside space, room for a home office. And the reality is that in a lot of areas of central London, that's going to cost you at least £5 million. So it's partly to do with what people have wanted to buy. And the reality is that they've had to spend that sort of money. But also those are the people who, at this point, seem to be the ones who are shopping for property in London. So that top end of the market really, really buoyant as far as our data is showing.
And finally, how are demographics affecting the UK housing market? I mean, I'm not very happy about senior living being 55 plus, but there seems to be a lot of that going on. And, we've touched on the subject of students taking the stock in London, but how do you all feel the market's being affected?
I think the demographics, from our perspective, is there's a couple of things that are playing. They're quite sort of long-term phenomena that are affecting things. People are living longer. So family-sized accommodation, this isn't just a PCL thing, this is sort of a UK thing. Family-sized housing is becoming available on the market more slowly because people are living longer, so they're not selling it as quickly. We've also there are predictions in the UK over the next 10 years or so, there'll be an extra million odd people, an extra million plus people living in single occupation, living on their own. A lot more people are getting divorced. The divorce rate is whatever it is. I forget what it is now. It's 1 in 3 or something. It's quite a high divorce rate. So people go back into separate homes. People are buying later. First-time buyers are buying later. All of these things are putting a lot of pressure on requirements for extra homes at a time where as a country, we've not delivered on the number of new homes have not been built that were needed. And it's become a real sort of political hot potato to that extent. And I think that the stamp duty thresholds have sort of exacerbated that a little bit because there've been a time where trading down out of your family-sized home, trading down to a smaller property, because of the cost of stamp duty on the purchase, has just meant it's not that viable. It doesn't make enough of a difference to somebody to do it. So I think those are sort of demographic shifts which are exacerbating trends that already exist in that we don't really have enough housing, the shortage of supply. So I think those are some of the things that we're struggling with at the moment as a country in the housing market.
I mean, I wouldn't be surprised if the government looked at downsizing and stamp duty, because one of the biggest problems it faces at the moment is a social care crisis, and it feels like it genuinely is. So I think the government is going to have to start thinking bigger about that, and property and older people rattling around in big homes, I think, is going to be part of that. I think I read somewhere it was on the table, or it was considered at some point, or it may be in the future. So I can see that seems to me to be a perfectly logical thing for the government to do as part of this bigger social social care problem. I'd say it's those sorts of changes that I think will start to affect the way that the housing stock is being used. At the moment, there are definitely there are inefficiencies.
Yeah, no, I'd agree, and I think that it's about incentivising, but it's also about building the right sort of stock for those buyers. I mean, there's an example. There's a couple of new build developments in Marylebone, and their target market was young tech money, and actually the people who bought them were retirees who were downsizing from houses in St John's Wood, Maida Vale, Little Venice, who had 5, 6, 7 million pounds from the sale of their house. They wanted somewhere that was oversized, so it fitted their furniture, it fitted their family. If they had 10 people around for dinner, they could fit in. But also it was walkable into the West End. And I think that we think that retirement housing is sort of very, very small flats with a sort of communal lounge somewhere on the edge of a town, and actually those people will move if they have the right sort of thing to move to. And I just don't think we're getting that right at the moment. And so that's the real challenge: is building family houses for those first time buyers who are buying at 35, for whom a 1-bedroom flat just doesn't suit their lifestyle anymore, but also building the right housing for people in their 60s and 70s who would downsize from the big family home, but you've got to attract them with something really fantastic that fits with their lifestyle. And I just don't think there's enough of those properties out there at the moment.
Which would help enormously with the supply, the sort of natural cycle of property ownership moving around, which would go a long way to this sort of issue of lack of affordability. Because I think if property is transacted more, if there was more natural fluidity in the market, you wouldn't get these sort of hotspots or these sort of real anomalies where you get these big sort of steep price rises, which make it very unaffordable for people in certain places.
Well, it's been fascinating talking to you all, and I hope that we can get insight from you again at another time in the property cycle.
It's been a pleasure. Thank you very much, Farnaz.
Thank you, Farnaz.
Yeah, thanks for having me. It's been great.
Thanks for listening to the London Property Podcast. Head over to londonproperty.co.uk and subscribe to our newsletter to receive latest updates.